Well, this is the first Friday of the month, and that means it is Jobs Day. So we got the one of the more impactful reports that affects interest rates monthly, y'all, and that is the BLS jobs numbers. Came in much weaker than expected this morning. That is not great news for the economy, but it is usually pretty good news for interest rates. So we're going to see how that affected us today. It is the 7th of August, Friday. I hope y'all are doing well. Let's dive right into the numbers. Mortgage News Daily. 30-year fixed rate conforming loan in their survey, 6.74% today. Y'all, a week ago, we were at 6.83, so we saw a little bit of relief on these jobs numbers. We were at 6.68 30 days ago. The 30-day high over the last month has been 6.85, and that was back on the 23rd of July. And on the 17th of July, we had our 30-day low of 6.63. So we've been trading in that eighth of a point range in the higher sixes for the last month or so. We may see a little more relief from the rates that we have today if we continue this trend of the bond market rally that we're currently seeing. We might price a little more favorably on Monday. Of course, a lot can happen between now and Monday, particularly, y'all, with the unrest that we have overseas. So what does that mean for interest rates? Well, you've got the update on rates themselves, but let's look at Fed futures, y'all. We were at a 33% chance of no change a week ago, according to the CME Fed futures for the 9/16 meeting, meaning there was a 67% chance of rates going up a quarter or more at the meeting, that the next Fed meeting on September the 16th. There is now only a 44% chance of a hike going into that meeting. So we've kind of flipped places with where we were. That's a significant change in Fed futures. This unemployment report really took the wind out of the sails of those on the Fed panel that were wanting tighter policy. So that's the good news. If there is good news about weaker employment, that would be the only silver lining that you can find in this report, because it was much weaker than expected. Economists were expecting 80,000 jobs to be gained. We had 23,000 jobs lost, y'all. So that's 103,000 jobs to the missed, to the downside on this report. But that's not even the big news. We had major revisions downward to the two prior months reporting in this BLS jobs number. Now, the headline that a lot of folks are running with is that the unemployment rate dropped from 4.2 to 4.1%. Y'all, that was not, while we want to see low unemployment rate, the reason that we got to the low unemployment rate is 1 million people left the workforce in the last 60 days. According to the household survey, 700,000 of them lost jobs. When you do the balancing act between folks that left the labor market and those that physically lost a job, they offset each other. So it kind of reports as a 300,000 job gain mathematically, which drives the unemployment rate down. Bottom line is, it's only down mathematically because there were 1 million folks that left the labor force. So this is not, you can't find daylight in this report or positivity in this report unless you're really looking for a partisan reason to do so, y'all. The bottom line is, this is much weaker than expected. There is significant job weakness out there. It's been reflected over the last several months, y'all, when you get into the internals of these reports. And for the folks that are on the Fed panel that have made statements about the strength of the labor market, encouraging them to tighten Fed policy, not sure how they can move forward with that given this report. I do think that we will continue to see Fed futures price out the possibility of a cut. We said a couple of videos ago that I thought the possibility of these Fed hikes that were being baked into Fed futures were a bit overdone. So I do think that job weakness is there. When you look at the unrest, the geopolitical unrest that we have, the concerns over higher prices, they may not be supply side or demand side, rather inflation, but they are certainly squeezing people's wallets at the pump in particular. That is going to have a dampening effect on economic activity, and I think we are seeing that in these numbers. We're certainly seeing it in the jobs market. I do think that that's going to translate into further economic, potentially, slowdown in the coming months. Something to keep an eye on. Again, the silver lining around any economic downturn is it typically leads towards lower interest rates. So Historically, even recession, y'all, have been a great time to buy a home because that's when we see some of the lowest rates. When you look historically at where interest rates are, the lowest rates correlate with economic distress. That's just an unfortunate fact of the industry that we operate in, but it's at least some silver lining for the folks that are in a position to buy. In any event, I hope this is helpful for you and for your clients. We are always here and honored to have your referrals. Contact information is on the screen. Stay blessed, stay safe. We'll talk to you next week.